Hey guys, and welcome to another video. Today we'll be looking at Disney stock and whether it is a good investment. So some things to note, Disney owns different other companies like Marvel and ABC and ESPN, National Geographic, other movie studios, Sky, Hulu and so on. So different TV and movie companies. And it has its own streaming service with Disney Plus, which is also really popular and makes and high revenue. So now let's look at the chart. You can see Disney has gone down from $200 to $83, which is the COVID low of the, which is almost at the price of the COVID low. So is it a good time to buy Disney? Let's first look at the numbers. So we have rising revenue, which is a good thing. Then we have a profit, which has declined more or less, which isn't that good. No dividends. The number of shares has gone up a bit, but has stayed constant over time. Then we look at cash flow. Cash flow from operating activities has gone down. That's not that nice. And free cash flow has gone down also. And then we look at net debt. Net debt is positive, which means that they have more debt than they have cash. And total debt is 42 billion. And does the income account for that? Not that much, depending on which numbers you're looking at. Well, that could be a bit, you should be a bit careful when looking at that debt, because it will decrease the profit Disney makes, because it has to pay interest on that debt. But also it won't go broke with so much debt, because it's a big company and it will handle that debt. But it's something that should lower the price you want to pay for the company. Now let's look at price to earnings ratios. 16 and now it's at 54, which isn't that nice. But we'll see later if this impacts our valuation. And net margin is at 3%, which is low in the average, but will it go higher? We'll look at that. So first we look at bear and bull cases. Some bear cases are that Disney has a lot of competition in the streaming and media category due to Netflix and other streaming services and YouTube, for example. And it has declining profit margins. And it could, and Disney Plus doesn't make a profit until now. Also, after COVID, not as many people visit their parks as they used to. Some bull cases are that Disney has pricing power and is a well-known brand, and it has many really famous movies and movie titles and brands under its company, and it has many popular movie studios like Marvel and Star Wars and so on. But to be honest, I'm more on the bearish side, and I don't own Disney stock. But we look at the numbers now, and I will do some different scenarios on depending on whether you are bullish and bearish and how much you can expect to make. So we've entered 82 billion as revenue. Revenue growth of 5% makes it go up to 133 billion in 10 years. Profit margin, let's go with a low profit margin in this case of 4%. Yeah, 3% in the lowest case. Price to earnings 10, which would be really low, but these would be the lowest assumptions. In this case, you would make a big loss. So if you think Disney will only grow a bit and its profit margins will stay that low and its price to earnings will be really low, you would make a big loss on it. Now we put in some more reasonable numbers maybe. To be honest, the stock is really subjective. I don't know how to value it the best way, but it's definitely a turnaround play. You want to, you definitely need margins to rise again. So you have to know, you have to think for yourself if you think margins will rise again. And personally, I don't really think they will rise above 10%. I don't see that really, but that's just my personal opinion. You may have a different opinion. So I'll calculate the value with higher margins too. So let's first put in a margin of 10% maybe. I think that could be possible, achievable. 10% and maybe revenue growth of 8%, which would make their revenue almost double. Yeah, 7%. 7% is more reasonable. Price to earnings, we put that at 15, even though I think 10 is more reasonable for Disney. I don't know why, but it's a 10 price to earnings for me. 15 in this case would make a starting price of $37. In this case, this would be my assumptions. I would buy Disney around $37. This would be my entry price. But depending on whether you think margins will rise again, which could definitely happen, because since when are they so low? Since COVID, I think. Since 2020, yeah. Yeah, that could be due to theme parks and so on. But let's say they rise to 16% again, which wouldn't even be the highest, 16%. Revenue stays the same and the rest also, then your starting price would be $60. And let's say they rise to 24%, which would be the highest until now, then your starting price would be $90. So depending on whether you are convinced that Disney can go back to its form before COVID, it's a good company. Maybe we'll also look at the balance, at the financial report of Disney soon. So now let's value their cash flow. Disney growth rates. So financial investment bankers think their growth rate of free cash flow will be 20% in the next 5 years every year, which is high, but okay, let's see. It's higher than, what did I do a video about? Alibaba, I think, which was lower, but okay. Now let's put in terminal value, free cash flow multiple 15. We'll put in 10 in this case. And in this, okay, free cash flow would be 1 billion. Let's put in 1,000. Stock-based compensation would be 900. We put in 900 first, but maybe a bit lower after that, because 900 would make this investment be trash, let's say, because it's almost all the free cash flow. Total debt, net debt is 40 billion, so we'll put in minus 40,000. 40,000. And shares outstanding is 1.8 billion, 1,800. And our intrinsic value per share is minus $21, so massively overvalued in this case. Let's put in a lower stock-based compensation, even though it states that the stock-based compensation is almost all of the free cash flow. Let's put in first 600, like a few years ago. Would make it still overvalued. And now let's put in 1/5. 200 still overvalued in this case. So if you like the cash flow calculation model, Disney isn't a stock for you. Even with 20% growth per year, it wouldn't. It would still be a massive loss. Now let's look at the financial report. So now you have to decide whether you want to invest in Disney or not, and mainly whether you think margins will rise again or if they won't. Depending on your opinion, Disney could be a nice investment or a bad investment. If you are looking for other investments you could make, watch the videos about the Alibaba and PayPal. And if you like this video, give it a like, and bye.